I just started recording. Oh, because sell opportunities will give you more pips than buy opportunities, because buy opportunities will just be retracement to the upside and for the market to keep selling lower. So sell opportunities will be giving you more pips than buy opportunities, which means it will be more adequate for you to be able to look for more sell opportunities than buy opportunities and a downtrend. So if this market reach out for this low and this low, we would see a potential buy position towards the upside before some aggressive sell keeps coming in. Who knows? But then before that, I hope that answers Mr. Basic question. If you're not clear about it, can let me know, and I will be pleased to elaborate more on that. Mr. Hanson says, how do you know the market on the left, which is the 4-hour time frame, is institutionally sponsored? I just explained it. I just spent a whole of previous class explaining it here. I just spent a whole of yesterday's. But you know what? I'm gonna do it because that's the reason why I'm here. I wasn't even explaining that the 4-hour was institutionally sponsored. I was explaining that the daily was institutionally sponsored and the weekly was institutionally sponsored based off of this last bullish candle. When the market slipped into this area, it gained more bearish momentum and it sold. Why was it bearish there? Because if you look at a 4-hour time frame, right? Our 4-hour time frame, this was where the institution do this kind of institutionally sponsored, right? Because it was institutionally sponsored, the market needed to buy a little more buyers in the market, thinking that this market is going to keep buying above. Meanwhile, they need to stack their buy orders, push the market above, bring more buy orders so that their stops will be residing where somewhere around this low. Now, what happened? The market crashed towards that low. Now, before this sell, there was this last bearish candle before this bullish movement, which becomes the mitigation block. Now, the institutions still have their buy position open, right? They are take all of these sell in their buy drawdown, but they are still making money in their sell position. Now, around this area, they offload their sell position, they have secured their sell profit, right? Now their buy position is in drawdown. How do they need, or what do they need to do to come out at break even? They bring back the market on where the sell actually began, because this is what the sell began. It's not here. This is where the sell began. The sell began here because they try to engineer buyers in the market with a buy position, and then they collapse aggressively. Now, when the market came back into this area, as you can see, the market came back into this area. This bullish 4-hour candlestick, this nice 4-hour swing bullish candlestick becomes the mitigation block for them to be able to remove their buy position at break even without taking any loss and accumulate more sell orders here to push the market even lower. Understood, Mr. Hudson? Hanson, Mr. Hanson. Thank you, sir. Well understood, Mr. Bezik. Pleasure is mine. Okay. Yeah, we're good. So, okay, guys. So, what I was saying is, what I just explained literally is what I wanted us to discuss about today, which is here. Where are all the notes? They're gone. No, they're not gone. Okay. Okay. That was what I was trying to explain here in a nutshell, defining your goal, your development, or developing a plan, respecting the plan, you know, taking actions and building confidence in your trading strategy and every single thing that comes with it, sticking to your plan, because sometimes your plans get boring, you know, you just feel like you need to do something new, but don't stick to it, okay? It's the boring part that's even more interesting, because it's the boring part that will start making you money. And sometimes when you think it's even more boring, stick to the more boring part, because the more boring part will make you abstain yourself from losing trade and focus on more winning trades. Because when you start being profitable, it becomes boring, because for you, it's very easy. It's easier than you ever thought it would have been. So but stick to it. Or find something doing. Okay, that's when you can even start doing other things because it's boring and you can just stick to it and you keep doing whatever it is that you want to do to go about your day. And then comes your success because you've been seeing all of this thing repeating itself over and over and over and over and over and over and over again. Then the success start flowing in slowly but surely. And you deserve it because you've earned it and you've put in the work required and you've put in the time too. So you deserve every single penny that you're making. And when I see a lot of people think that trading is luck, from my previous class, I was talking about marketing and every single thing. Everyone can do marketing. You can do it. You can be very good at it. You can focus on the marketing part of trading. And trust me, you'll make a living out of it. You'll make a substantial amount of money out of it because everyone tries to sell something new. And everyone has always discovered the Holy Grail that every new student is kind of curious to pay for. So you always make money in that aspect. You can also make money from selling classes. Or you can also make money from becoming a broker, ambassador, a broker is one of those offers that multiple of those offers that I've respectfully declined because, I like who I am. I like my quality that I am. I'm not willing to sell that for whatever it is right now. And I respect my community enough. If you don't want to be on another channel that to do that, let them do that. But I respect you guys enough for not being looking at a conflict of interest, if I can put it like that. Because if I start doing things like that, it's like your interest doesn't become my priority. And I'll be focused on you losing more money so that I'll be able to make money from referrals. And it's not one of the ethical part in my trading career that I'm trying to indoctrinate because some of these brokers, and these mentors, when they actually create, your account using the referral link, they make money when you lose money. So I'm not really a huge fan of that. So I just kind of decline some of those approach by these brokers, CEOs or managers or whatever, when they approach me to pitch me some kind of stuff like that. I just decline respectfully, of course. Just decline it. So yes, now the bigger picture, right? On the bigger picture, we have today's class would be intense. On a bigger picture, what do we have? We have macro market analysis, we have interest rate analysis, and we have the dollar, we have interest rate analysis, we have intermarket analysis, and we have seasonal influence, right? Now, let me write this down. On the bigger picture, on the bigger picture, we have macro market analysis. I have macro analysis, right? And have macro analysis. Under macro analysis, we have we have macro analysis, we have interest rate. Analysis. We have intermarket analysis. And we have seasonal analysis. All right. Okay. We have these. macro analysis, macro market analysis. We'll have interest rate analysis. We'll have intermarket analysis. We'll have seasonal analysis, right? Now, when we go to the intermediate perspective, under intermediate perspective, right? On an intermediate perspective, what do we have? Okay. On the intermediate perspective, we have top-down analysis. We have quote data. And we have, what do we have next? We have market sentiment. Right. Then we have a short-term perspective. That's the last. Oh, I know it's late. I know you're probably bored, but please don't sleep. The explanatory part is even more important than this. Just bear with me. Let's write this down so that you can also write it down on your notepad, and I'll be able to explain. I will have the short-term perspective. Under which we have correlated analysis. And we have time and price. Oh, damn it. Yeah. Then we have IPTA. That's what everyone has been waiting for. Interbank Enterprise Delivery Algorithm. Then we have IPTA. Now, this is what will give you the Holy Grail. This is what will give you the secret to selecting high trade setup. These alone, if you're able to master these and understand these, you probably won't need me anymore. Perhaps you need me on the sentimental part of it, but to an extent, you would have had a lot of mastery of what price has to do. And you could write this right now in writing, but the most difficult part of it all is the executive part of it. You know, executing this is way important. And that's why the theoretical part of trading takes lesser period for you than the practical part of it. Is the practical part of trading that even makes your trading journey even longer. But the theoretical part of it, you know, 6 months or 3 months, you can be done with an intense mentoring program, you can be done with it. But when you go to practicing in the market, that's when it becomes way difficult, because it's time for you to subdue your emotions. It's time for you to manage your emotions, your mentality, you know. I'm not happy to talk about it, but I've suffered through depression and trading. I've suffered through anxiety, and I've gone through all of these things in the beginning of my trading career. And I'm not happy about it. I'm not wishing it for everyone or anyone else, but it's part of the journey. And and the most important part of it all is I never gave up, you know, and I'm here with you guys sharing it and giving it out for free. But I'm sharing this with you guys for you to be able to understand what it requires and what it would take you for you to be able to attain a certain level of consistency in this game. Sometimes you will lose a lot of money. You get literally, morally, emotionally, mentally demoralized. You know, you don't want to do anything at all. You'll be sick in your stomach, you know, you sleep in your bed, you don't even want to get up, you know, you don't even have appetite. Maybe you'll lose a girlfriend, a spouse, and anyone else that you love and care about. And all of these things add up. And sometimes it will happen. It's like the world is crumbling on you because everything is against you. Everything is against you. You just have yourself. And if you don't have enough motivation to be able to push yourself back up when you're down the most, because when you're down, there's nowhere else to go but up. But where do you need to have that energy to push yourself back up? You need to be able to reboost yourself back up. I'll be honest with you guys, that night that I cried. There's night that I looked myself in the mirror and I was like, what the hell am I doing with my life? When I look at my friends and the people in my same generation, they were making what, a lot of money at their age at that time, but it's not the life that I wanted to live. It's not the life that I wanted my family, I wanted to build a family off of. And I just decided that I'm going to stick to this regardless. And that is the mental state that a lot of us get caught up in. Sometimes we abandon and we think that going towards that. But one thing you forget is when you abandon something at the midway, you're going to start something new with fresh. But meanwhile, you could just continue with what you're doing and just be patient enough. I'm telling you guys, I'm sharing you guys my journey and what it cost me. And I'm not shy about it. And, you know, I don't really reserve myself. I don't even feel bad about it. But I'm trying to make you guys understand that it's not going to be easy. It's going to be a tough ride. But do you have the balls for it? Are you able to motivate yourself when no one else, not even me, will be there to even send you a message of motivation? That's the reason why sometimes I even do these Friday video tips to try and motivate you guys once in a while, because I never even had anyone that I can turn to. You know, 2018, there was literally no one talking about Forex. Nobody was there talking about Forex. There was no mentor that you see now everywhere. It wasn't there. So they were not like, I would cry. I would look at myself in the mirror, like, what am I doing? And tears would run through my cheek, but I'll wipe it up, be able to motivate myself even more. And here we are today. So you can make a living out of trading, but it's not as easy as everyone make it seem online. But is it worth it? 100 times it is. Was it easy? Hell no, it wasn't easy at all. It wasn't. So, okay, thank you guys for your ears. I know sometimes I get really, really, I go sometimes out of topic and I just getting emotional and every single thing. So, you guys will have to excuse me with that. Thanks for the compliment. I'm sorry I got carried away with the comment section. The bigger picture, right? The bigger picture. Let's get back in game. Now, under the bigger picture, we have macro analysis, which study the inflation and deflation in the market. You want to study a currency pair. Now, look at these things, right? That's the reason why I always tell you guys, if you want to be a forex trader, it's good for you to always stick on one trading pair, so that when you learn all of these things, you understand, you will be able to understand why is the dollar doing what it's doing. Because when you study all this and you focus on trading just dollar pair, you'll be trading USD CAD, USD JPY, USD AUD, all of the USD pair, you'll be trading there. So when you stick to one, it'll help you a lot. A lot. So, and when you learn all of these things and you apply them on that, it gives you what? Where is it? The correlated analysis. But we'll reach there just slowly. Now, macro here, on the micro, oh, it gets even way better. Now, here on the macro, what do we have? We have inflation and deflation. What are the reasons, or what are the things that's going to cause a specific currency either to inflate or deflate? You need to study that. You need to have the overall bigger picture of that. Now, the next one we have interest rate, right? interest rate. In the interest rate, we have the CRB index, which is for commodities. We have the dollar index, which is for dollar, but we will focus more on the dollar index, which is we have a CRB, which is for commodities. And we have dollar index, USDX, for the dollar. For the dollar index, right? That's what we have for these two, for interest rate. Now, on the market, under intermarket analysis, we have a bullish tendencies and we have a bearish tendency. That is for intermarket. And we'll have the bearish tendencies as well. Now on this, okay, I think that is it. Market maker. No, this is instead under seasonal tendencies, seasonal analysis. Intermarket analysis. I'm sorry, guys. Sorry, guys. I am really sorry. And if this class ends, I'm going to send another new link. Don't even worry about it. Under inter-market analysis, we instead have CBD commodities and dollar index. On the interest rate, we have interest rate. On the interest rate, we instead have now low or high rate of unemployment. That was where I was lost because I was kind of mixing this up. I was like, where is one? So I'm going to give you guys some few minutes for you to be able to recopy this. Under here, we have now low and high rate of unemployment. Okay. Okay, there you are. So you guys have like, you guys can be copying these. On an intermediate perspective, on top-down analysis, we have the monthly, weekly, and the daily charts to analyze. This is incredible. Here we have monthly, daily. Oh, excuse me, monthly, weekly. And daily charts to analyze off of, right? That's for the intermediate. The top-down analysis on code. Have bullet hedging by smart money. The code data. It's very important. Nothing is to be minimized here, please, because it's when you correlate all of these things that give you the higher time frame, overall bigger perspective towards a specific price delivery for a duration of time. So call we have bullish hedging. Very smart money. Yeah, bearish. Hedging by smart. Okay. And we have extreme. So, okay. I'm gonna put this above here so that gives you visibility. Don't have market sentiment. On the market sentiment, we'll have extreme market bullishness and we'll have extreme market bearishness. And we have extreme market bearishness. So let me do something here. You guys will forgive me for this second. Mhm. Good. Fine. All right. I wanted to do this so that I could um okay. I could use this image and send it to you guys on the Telegram channel for studies. Okay. So that is that. Then we have the short-term perspective. Short-term perspective is the dollar index smart money analysis. We'll have correlated pair smart money concept analysis. And time and price will have quarterly effect. We'll have monthly effect. We have weekly range. We'll have daily range. We'll have time of the day. So 4 minutes before this goes out, that we're gonna write it regardless. On correlated analysis, we have US dollar index, SMT, correlated pair smart money analysis. This is for you. Here we have time of the day, time and price. Other time and price, we have quarterly effect. 12 monthly effects. We have weekly effects as well. Daily range. And we have time of the day. Okay. Now, if there is the finale, which is institutional order flow, liquidity seeking, and market efficiency and paradigm. Okay, that is the holy grail. That is your holy grail. Now we'll have less than a minute. So we're going to end this session and we will continue. Before that, let me check out a question. Resistance.